What's up, guys? In today's video, we're gonna go over what a stock is, which it's a tiny portion of a company. A stock is also called a share. When you buy a stock, you're buying a portion of a company and you then become a shareholder. The number of shares you buy doesn't matter, but the dollar amount invested into the company does. So don't get deceived by the share price thinking you're better off owning a lot of cheaper stocks versus one that's higher priced. For example, if you buy one share of Facebook for $300 or 3 shares of random XYZ company at $5 each, you still own $300 worth of a company. If either of these companies increases by 10%, you'll have $330 worth of either company or a 10% gain. So many people are thrown off by this and think that they're actually in a better position by owning 60 shares of a company versus just 1 share of another. It does sound better, but really it's not. What's up? I'm Maggie. I teach beginners how to invest through my YouTube videos and one-on-one services and through my new course that I just launched, Start Investing with Confidence. I'm a certified financial planner and I would love to be a resource for you. So take a look at the services in the link below and let's get back to the video. For most of us, when we buy stocks, we own a teeny tiny portion of a company, but people like Warren Buffett may own a large portion of companies. Coke, for example, Buffett owns about 10% of the company, which equates to $22 billion. This just gives you an idea of how much stock you'd need to own in order to own a significant chunk of a company. But regardless of how much of the company you own, you still have the opportunity to profit from the company's growth or lose money from its lack of growth. So now, how do stocks work? And how do you make money or lose money after buying them? First of all, here's how they're supposed to work. When we buy a company's product, and tons of other people do as well, that creates income for the company. If enough income is there to cover the expenses, like for Coke, creating the cans, creating the actual Coca-Cola, the facility that's producing it, the advertising, and all of that goes into creating a product, and the company grows and expands so more Coke is sold at more places, then the company itself grows. When the company grows, your share is now larger than it was when you bought it, so you can sell it for more than you purchased it at, which is what causes stocks to increase in value and how you gain money with stocks. If, on the other hand, people stop buying as much Coke and the company can't cover their expenses, then the value of the company goes down. And if you decide to sell your stock during this time, then you're likely to lose money because now it's gone down in value and worth less than it was when you originally bought it. Okay, but how do things actually work? And how do we actually make money or lose money? Sometimes it works exactly like it's supposed to, just like I said. When the company does well, you do well. When they do bad, you do bad. But here's what happens other times. Let's just say Coke is doing really well with their sales. Things are looking really good for the company. Analysts that review the stock see everything going really well, and they put an estimate of what the company is supposed to be worth at a certain time. Then when the company reports earnings for the past quarter, and every publicly traded company is required to do this quarterly, let's say when they do report earnings, they don't do as well as they were expected to do, then the value of the stock may drop from a large number of people selling when they hear this earnings report. The company may have actually done really well. It just may not have done as well as they were expected to do. Another thing that happens is when something completely random happens, like say the company CEO made a ridiculous comment or did something completely unethical. This gets out to the news and the people may rush to sell their stock because they're worried that that's going to impact how the company performs, and it drops the value of the stock because all of a sudden less people want the stock and it becomes less valued. There are a lot of factors that go into the price of a stock and what causes it to change in value from day to day, so it is important to just tune out the noise and focus on what matters. Do you still drink Coke? Do your friends and your family and the majority of people drink it? And is it sold everywhere you go? And if the answer to this question starts to become no, then you want to reassess what you're owning and maybe consider something else. If you're ready to learn more about investing and get your money working for you, I invite you to head over to my website and grab my 4 steps to invest quick start guide. It breaks down those first questions you may get hung up on when you're getting started, like setting your investment budget, choosing your account type, choosing your investments, and all of that stuff. I am super passionate about investing because it has allowed my husband and I the ability to grow our net worth to over $700,000. And I'll be putting out a video on an update on that soon. But for now, be sure to subscribe and I will see you on the next one. Bye.